Welcome to the first full FX Disruptor series of 2022 with LMAX Group. Excuse me, frog in the throat to start with is always a good start. My name is Colin Lambert, publisher of the Full FX, and with me, as always, for a Disruptor series is my Disruptor friend, David Mercer, CEO of LMAX Group. First one of the year, David, so may we have plenty of arguments over the next 9 to 12 months.
Great to be back, Colin. I look forward to doing battle.
Yes. The timing for our first video is actually quite propitious because you recently announced the launch of futures on LMAX Digital on crypto. So I thought we'd just kick off. So why have you launched? Yeah, why have you added futures to you are historically speaking an OTC venue?
Yeah, good question. So two real reasons, right? And I'll go into a bit more detail, but market access and market structure. So if you look within LMAX Group, I've got probably three distinct client segments. The banks, the non-banks, proprietary trading firms, HFTs, they don't like that terminology, and brokers. So the last two groups, when we launched LMAX Digital 4 years ago, immediately adopted LMAX Digital and crypto trading. It was easy for them. It was something they needed. They trusted our technology and they were active in the asset class. So really easy to access the market, and they were grateful, and hence we're relatively successful. Traded 1.5 billion ADV of crypto last year on LMAX Digital. But to this day, one segment completely missing: the banks. And it's not what everyone thinks. Oh, they don't like crypto. They don't want to be involved in crypto. We have many conversations with the trading desks on a daily basis. They want to access crypto, but at the moment, there's not a regulated environment for them. There's not clarity on AML regulation globally. So it's difficult for them to access the cash products. Sometimes it's internal approval they're waiting for, and quite often it's external approval. So they're regulated by the Fed or they're regulated by the Bank of England, and there's no clarity there. So first and foremost, we thought, well, what product can we create for effectively half my client base? Yeah. And that naturally moves into derivatives. So then you'd find a lot of them would say, we are trading the future right now. That's the only thing we can access, but we don't like the fact that it's 5 days a week. We don't like the fact there's a lack of liquidity, and we don't like the fact that it's in North America. So you move into the market structure perspective. Now, look, we're in capital markets. Ultimately, I'm not going to say anything we do is altruistic, but I think there's an obligation to try and effect a better market structure. And I hope we did that a little bit in foreign exchange. I'm not going to take all the credit or even any credit, but I think something of what we did over the last decade is maybe try and effect some change in FX. And hopefully we can try and do the same in crypto. So what do we mean by market structure? Well, LMAX Group has a regulated MTF. So LMAX Exchange is a regulated MTF, regulated by the FCA, has been around for 10 years. It can list many products. It can list futures. So suddenly when you start speaking to banks, non-banks, brokers, go, do you want to trade a derivative on an FCA regulated MTF? They say, yes, please. Next part of it, okay, that's easy for me to do. It's within my gift. The next bit of market structure is, what about clearing, David? What about credit? Crypto today is really, really expensive. It's in terms of capital, especially if you are trading on many venues, because effectively you have to double collateralization everywhere. So obviously there's a solution to this. It's been around in traditional finance for decades, right? Central clearinghouses. So we realized that if we wanted those market participants and we wanted them to trade on our MTF, we need a central clearer. That is easier said than done. So I've spoken to central clearers for 15 months, and we've only just made the announcement with 6 Group. Right? We spoke to many, some just had no interest, some just couldn't get it done. We're very grateful to 6 because from day one, they said, well, why wouldn't we do this? It's a fiat settled derivative. it's in crypto only. We know all your trading participants. Let's go. So I think there's a market structure play there, as well as some two things. We get market access to all our customers, and we have an effective market structure that others could potentially copy, by the way, down the line. That's okay, right? We're used to being in competitive markets, but wherever you're sitting with, being in a bank or a proprietary trading firm, okay, let's trade the future on that regulated MTF, and let's use the plumbing of our central clearinghouse that we use for other products today. Much easier, pragmatic approach for them than accessing the cash market. The last bit of that, sorry, I know it's a long answer, Colin, is having cash and futures on the same exchange, within the same exchange group, should I say, with the same technology is immensely powerful for all my trading participants.
Because I wanted to ask you.
Go on.
I wanted to ask you about that as well, because I mean, obviously, this does mean, cash and crypto and futures together. Yeah. So how are they going to interact, and how easy is it going to be for clients to trade both? I mean, is it literally just to, just add the product to their screen? So yes. The trick is capital management. The trick is credit. But in terms of accessing it, put it this way: all the banks and non-banks trade FX on LMAX Exchange today. It's the same API and the same hardware. So literally, you just request 2 or 3 new instruments and your permission for trading. It's that simple in terms of accessing and trading it. Post-trade and trade reporting is different. So whereas the FX goes down to your PB, this one's down to your clearinghouse, but that's relatively trivial. So accessing the market data and trading is easy. The harder bit is credit. We're about to solve that. I hope we can solve that by making it more capital efficient for everyone, where via sponsored access, we'll be able to net their cash positions and their futures positions, which should make their trading less capital intensive. And I think that will be somewhat of a game changer in the market, because at the moment that netting doesn't exist. So I hope we'll be able to do that, but that's a few months away still. And I guess that would help if you're looking at those active. I'm sure, I don't think that was actually an adjective you used earlier. You used every other one for these firms. But the active traders, for them, that sort of solution strikes me would be invaluable. Hugely powerful for them. Look, and for the banks as well. I mean, it's just at the moment, people are asking for 100% collateralization, and if you're lucky, maybe you get 50% collateralization. But it's really unlike, if you think of what we do for what you did for a living in terms of FX. There is so much netting and so much credit intermediation around the market that you can trade $1 billion position in and out of $1 billion position with probably collateral of $10, $10 to $50. That same billion in crypto costs you $1 billion, and you have to move it around because you're settling spot all the time. You have to move it from one derivative exchange to a cash exchange, even if you've just accessed the ARB or the yield or the contango that exists in the market. It's like double collateralization. So we hope this will be powerful for them. And I think the terminology, it comes from outside of markets, is it should give those trading firms better buying power. So it means effectively they can stake their capital in more places at the same time. I guess on the other hand, though, you look at it, I mean, I guess one of the attractive aspects of the crypto markets for certain firms over the past couple of years has been the huge opportunity for arbitrage. Mm-hmm. You're about to destroy that, aren't you? Well, no, because we won't be we happen to think we are the institutional venue for price discovery in cash. We won't be on day one in futures. Yeah. And the big market, there's a 2-speed market in crypto. There's the retail platforms, and then there's the institutional exchanges, of which we're number 1 in cash. Now, there is price discrepancies, definitely, between wholesale and retail right now. And a lot of those trading firms are just accessing that. And then you have these non-institutional products. They're called perpetual swaps. Don't ask me to explain them all right now, but
A lot of the retail investors are using leverage to get into those. And there's pricing differential or arbitrage between those. So the other bit, I mean, we come from traditional finance where there's been a lot of technology investment in latency. Most of the retail exchanges are, I'd say, high latency rather than low latency, right? So they're based in the cloud. So you have a lot of market makers making in all those venues, great, but then they want certainty of execution and certainty of the speed of execution, which hopefully will mean matching with LMAX Digital or LMAX Exchange in LD4, NY4, TY3. So I think it'll still exist for a while. And what's the great thing about it is about arbitrage when you come to futures versus spot is everyone always has their own view. Everyone has their view about basis. So and people tend to close it up if their view is different to yours.
Yeah, I can't see how crypto generally is going to be any different to any other market. I can't see how it can be immune to efficient market theory at some stage.
Correct.
So
I think, we're just talking about that again, about the institutionalization. I mean, people may not believe me when I say that. Really, it is a market structure thing, right? So I happen to be a believer that crypto will be changed for good in traditional finance. And I think it'll become part of what they now call TradFi. But it's still really small, right? Everyone should remember that. There's $200 trillion of assets in custody under management today. $200 trillion. The total market cap of crypto today is 2 trillion.
Yeah.
Right. So 1%. Come on. So many column inches, so many press inches, but it's tiny in capital markets. Of course, people like LMAX, people like myself wanted to grow, and of course we'll benefit from that. But the way we can make it grow is by bringing in some proper traditional market infrastructure and effective regulated environment, so that all of that 200 trillion, should they wish to access the market, can access it. Today, that's not the case.
So something else that struck me in your release, actually, I mean, it's been 2-3 years of weekend FX, I think it's been going, which is obviously so 24/7. And you are a big believer in the fact that, markets should be 24/7.
Yep.
It's not. It's another thing we can tick off our list that we don't necessarily agree on.
Yep.
But I noticed you're starting the futures 23/5.
Yeah.
Why is that?
Well, I wish I wasn't. No, look, we've got to be pragmatic, and I'll go back to that. It's okay. A lot of people, traditional finance, don't agree with my view on 24/7. It's just going to happen. I'm sorry. There's no point in fighting it, everyone. Markets will trade 24/7. It's the way of the world. Don't see it as a negative. You're not asking people to work 28.5% more. We know that's not possible. I know that's not possible here. So we employ people who work 5 days a week. 2 of them might happen to be a Saturday and a Sunday, right? It was my misfortune to be in here on a Saturday recently, probably not working really. And suddenly I realized, there's Lance on my wrist desk, there's Bella on the digital desk. And I said, what are you doing? And they said, we're working, David. It's a Saturday. I went, But actually it's opportunity for these young people. So look, on the futures, we have to be pragmatic. In that I can say till I'm blue in the face, these are 24/7 markets, let's go. But let's think of, first of all, of the clearinghouse. The clearinghouse hasn't cleared 7 days before. So they need to make sure it's all working. They're committed to it. 6 are committed to it, right? So they're already staffing up, altering their systems, making sure they can do releases in the amount of time we allow them, so that they can effectively trade report and clear should it be required at the weekend. And then you talk about the GCMs, that clearing members. Who do you think they are? They're the banks. So again, these are huge organizations that may not be, well, they're definitely not used to 7 days a week. So first of all, test the product, test the systems, and then as soon as everyone is happy that all of that's working, that all the netting and the risk and the collateralization, the reporting is as it should be Monday to Friday, then we'll go Saturday and Sunday and be 7 days a week. So to be clear, look, it's a 7 day a week product. I would not have launched it And we would not have launched it if we thought it was going to stay as a 23.5 or 24.5.
So we need 6 to change to 7. Sorry, not sorry.
That's very
sorry.
good for you. That's very good for you, Colin. We should end this now.
I can hear that. I can hear the groans in the audience from here. So, to me, I just to close out, David. I mean, looking at the crypto space, and I think it's fair to say, you know, our Disruptor series inevitably ends up in crypto because it is disrupting TradFi, as you say.
Yeah.
We are still talking, and we've been talking for some time now about the institutionalization. I think you've given a good reason, a good argument here for how futures can help on LMAX Digital.
Yeah.
So is it really a question now of, and I guess this also comes back to the 24/7 argument, getting the rest of the industry to sort of not so much catch up, but just get on, have time to get on board. I mean, you know, for instance, ISDA are looking very closely at crypto derivatives documentation.
Yeah.
Which I think will be quite important.
Yeah.
So where do you think we're at in this sort of evolution towards what we would call, you and I would call an institutionalized market?
So interesting. It's very hard to time it. Somebody said to me, when was it? Last week, 2022 will be the year of institutionalization. 21 is when we talked about it. 22 is when it will happen. I think it's going to be more staggered than that. Where are we? I wasn't so certain in 2018 when we launched LMAX Digital, Colin. We were trying something to see if there was an appetite. But now in 2022, it's here to stay. It's not a fad. How do I know that? All the big names, all of those 35 banks I mentioned who trade on LMAX Exchange are having conversations with us. You know, a dozen of them now take the market data. That doesn't mean they can trade tomorrow, but there is intent there. And then, you know, I don't need to give anyone a shout out, but you've seen announcements by 2 or 3 of the large custodian banks about they're going to custody digital asset. That is huge for the market, because ultimately, traditional finance, the pension funds, the asset managers, where are they entrusting their assets to? Those custodian banks. And they're still not, and likewise, when they want to access the market, even if they want to access the spot market, again, they want to do it via banks. They don't want to place funds on deposit at ABC Exchange, ABC platform. So look, it'll take 2 or 3 years, in my opinion. It might be as much as 18 months before the Fed approves banks touching the cash asset. But then again, it could happen in the next 3 months, right? The Biden executive order last week was helpful. So look, it's definitely coming. I don't like to time it. I think by the end of this year, the market will be more institutional than it is today. But I think you won't be able to say it's institutionalized until the bulge bracket banks are all trading the cash in the future.
Yeah. Very reasonable note on which to end. How unlike us.
Indeed.
David, as always, great talking to you. Thanks for your time. Good luck with the futures, obviously, because I think, to me, it's interesting how, we do evolve through disruption and by trying things. And as you say, 2018, you tried something and it's come off, and that's great. You could look back at some of the banks when they used to try things in EFX in the early 2000s. We don't get anywhere without it. So thank you very much for sharing your thoughts with us on that. To our audience, thanks for watching, and we'll be back again soon. Thanks for watching.